Welcome to a new update in which today, instead of Thursday, we're going to discuss the macroeconomics as Bitcoin is correcting, altcoins are following even more, and we are going to discuss why that is actually taking place right now, and we're going to focus on why the DXY is breaking out. The DXY is the US dollar currency index. It is currently rallying as this week we've had some macroeconomic news taking over the markets, which is pushing the markets for Bitcoin downwards by a little bit. Before we continue, make sure to hit the like button, subscribe to this YouTube channel. Also make sure to hit the like button if you do enjoy the content, and check out our public Discord where you can get 1 week access to our premium platform and where you can also gather together to be in our community, learn more about the markets and chat with other traders. Additionally, make sure to whitelist yourself for the course. It will provide you discounts, but also the possibility to win one of them, as we are going to launch our course in the next few months, which is an all-around crypto course. It's the Crypto Course 101 from basics to mastery. It's going to be around 6 hours of content, video, and it's going to be an all-around course. Now, when we're looking at the markets, we can argue that the markets are currently trending downwards, and especially altcoins are trending downwards. I've made an update on those 2 days ago, and today we're going to discuss why the markets are moving downwards. And the overall reason is the strength we have on the DXY, and Bitcoin is correcting downwards at this point, which is actually an indicator of what the other markets are most likely going to do. Bitcoin is usually following first or moving first, and then the rest will follow. So what's happening on the markets? Let's move towards the charts. First of all, if we are looking at what the markets are doing, we have to look at what the news is of the week. This week was all concerned regarding this number here, which we can see on the screen. It is the CPI, and CPI came in better than expected. Amazing. So initially you would say that if the CPI comes in better than expected, that we would have seen a positive reaction on the markets, which means we would have seen the markets of risk on, which we qualify as indices, stocks, and Bitcoin and crypto. They should have been running upwards, but they are not. And the realization is you can see it in the charts, which is the year-on-year data is currently at 4.9%. So the short-term response to this is a positive one, which we've also seen during the day. And then the market started to turn around. Why is that? Well, we're not really falling down anymore. That is answer number one. The second one is that the month-to-month data actually started to go up again. So the month-to-month data becomes 0.4%, and also the core CPI remains really sticky. And because of the fact that it remains to be very sticky, inflation is going to stay around, and inflation is most likely not falling as fast as we wish, through which the arguments for the Fed to continue hiking the interest rates at the pace they have been doing, and to have more hikes being implied in the markets, is still there. Which means that if the CPI or the inflation doesn't come down, it results into a case where the Fed will continue to do its policy, and through that risk on will have a short-term correction taking place. And that's what's happening with the markets nowadays. Then on Thursday we've had some more news. Great Britain came with news, which was the rate hike from their central bank. But more importantly, we also had unemployment claims and PPI. PPI itself came in higher than the previous month, so it becomes positive again. Also, core PPI comes in positive again. So inflation once again gives an argument that it will be remaining to be sticky. Additionally, what we also see is the fact that unemployment claims start to rally. It is the first time that we are seeing this acceleration, and it's the first time since the summer of 2022 that we are having a number like we see here. And that we start to accelerate like we do. It's still nothing, so there's no clear response based from that. But as you have been hearing from me in the updates, if unemployment starts to rally upwards, it is an argument that the interest rates or the yields are going to drop down, that the Fed needs to pivot because they need to keep an eye on unemployment, as the labor markets are the most important one for them. Then additionally, we have had some data on Friday, which was the consumer sentiment, which came in worse than expected. And additionally, we've also had data from Great Britain, which was the GDP month to month, and the GDP starts to become negative again. So the concerns of a recession starts to kick in, and also the consumers are having a kickback in the sentiment because banks have been falling apart and overall people are not really feeling the hopes that the economy will remain to be strong. So in that case, what do we see as a response on the markets is that we start to fall down. So on a daily chart, you can't really see much, but if you're looking at the 1 hour chart, you can see the events taking place. This is the consolidation and the downwards move that we had before CPI came out. CPI came out here as a result, positive reaction on the markets, not really gaining anything. And I mentioned on social media that I preferably wanted to see 27.8 hold. However, we started to turn around and take out all the liquidity on the downside, and then we just continued to make lower highs. Support was lost, rejection and continuation all the time. So the trend is clearly downwards, which can also be reflected in the other charts. So for now, Bitcoin is moving around the area of 26k, and we're going to move into the thesis of what Bitcoin might be doing from here. I'm not as bearish as 20k or 15k, but I think that we're just having a pretty natural correction taking place on the markets. What do we need to check? First, of course, gold. Gold had a nice sweep off the all-time high here, as you can see. Since then, bearish rejection here as well, but still consolidating above the highs. I think that once Bitcoin or gold is going to break beneath the area of $2,000, I think it's going to be painful for the markets, and then we're going to have a cascade beneath these levels. So it's approaching a crucial area, which I think we must be holding if we want to sustain any momentum. Now, why is gold consolidating? Well, here we have the big boy, which is the dollar. The dollar itself is showing strength in the sense that it starts to break out upwards on the short term. What do we see overall? We see a downtrend. So I mentioned before, if we are having any bear market relief rallies, we can have some more sustainable momentum here. And I mentioned before that I've also marked this level here previously, which we were going to and then reversed. What do we see as an important indicator or level now again, which is basically this bounce as we can see here. So I'm assuming that the DXY is making a short-term relief rally, and anything in this range is going to be the point where you want to see resistance popping up, through which we most likely are going to have a downwards fall from there. I'll get to that in a little bit. What do we see more? The 2-year yields are currently still consolidating and potentially moving upwards. So this one is still consolidating. Consolidation is okay. But once we start to fall down with this one, that's going to be the moment that we're going to have an acceleration on risk on again, especially if the Fed is going to pause or pivot, which is going to have a reasonable approach on the markets. Now, the outlier we have here is the Nasdaq, which is currently still trending upwards. If we're looking at the S&P, it's just consolidating. When we're looking at the Nasdaq, it's showing more strength, so tech is doing well. And you would assume that Bitcoin was actually going to follow through. But is that the case actually at this point? Most likely what we see is that Bitcoin is pre-running or front-running everything that's happening on the markets when it comes to the indices. So in some tweets I've mentioned that the area of 13,200 points is an important level to keep an eye on. We are currently sustaining above it, which is great. The same goes for the level of 13,285. If these two are lost, I'll be assuming we close this gap here, and that's going to push the markets downwards even more for Bitcoin. But Bitcoin is most likely front running this, so we don't need to crash along with the indices, but at least once they start to show weakness as the dollar shows strength, Bitcoin has already been anticipating on it. Now, when we look at the altcoins, I've been mentioning this before. Altcoins in itself are currently on an important level of support. No real indicator yet, but if you're looking for investment thesis, I would argue that this is the area where you start accumulating overall. I think already in the past few weeks you should have been accumulating, so that is good. I think I'll be updating this on Thursday, on next Saturday's update again. Now, when we're looking at Bitcoin, what we see here is that the structure is still remaining intact. So we've had a brief touch of 30k and we've got a clear correction afterwards. So right now we're just moving downwards in the case that macroeconomics are giving us a hard time. So once we are going to get there again, it's going to result into a significant breakout. What do we see even more is that on the downside, we've got 25k as an important level to keep an eye on. So anything in this range that we have here is a level that we should be watching. So this green zone is the area that we should be watching for potential buy the dip plays. And based on the weekly time frame, everything is doing fine still yet. However, if you look at the daily time frame, and I've just been briefly touching on the lower time frames, the daily time frame shows a downtrend. So we rejected here. I don't need to have the magnet. We rejected here. We've started to fall south. In order to have anything else than buying at 25k, and this is the first marker we have, but this entire region is an interesting point of view. But this market 25k is definitely an area where you want to get interested into the markets. The other argument you could make is that we bounce back up and flip 26.8 to 27k. So what we're looking at in the lower time frames is that you clearly want to break those levels. However, we are constantly keeping a rejection going on. A rejection, right? So you want to break 26.8 to 27k in order to have an argument to start longing. Now what is the thesis here? The trend is downwards, which means that I think that we're going to continue falling down a little bit more. I don't believe that we're going to have a retest of 15k. Maybe we're going to 20k, but that needs to have some more arguments from macroeconomics, I think. And also we can be going to 20k if buyers are not stepping in at 25. I think until the next Fed meeting, or if there is going to be some other data coming in, until the next Fed meeting, it's risk off. Which means that I assume that the DXY, and currently it's making a pretty heavy move, is going to have this run towards the area of 104 points. And that will also mean that Bitcoin is continuing to show weakness, which means that I'm looking for interesting points here. And my thesis is different or changed when we flip 26.8 to 27k. If you do that, I think I'll be finding arguments to start longing to at least 29.5. As we know, we've got a gap, or we had a gap around that area. Here we've got it. So we can play the game towards that level. But until then, I'm not really surprised that we're having this correction at this point. I mentioned that I wanted to see some retest. We did, then we started losing it. So I just wait. And I think that's what you should be doing overall. I hope you have been enjoying this update. I'll be back on Tuesday with a new Bitcoin update. Subscribe, hit the like button, and I'll see you again. Have a wonderful weekend. Ciao.